Term insurance. What is the best term insurance for you to have? How much term insurance do you need? These are all questions that I hear very often. In this video, I'm going to cover and break down term life insurance because not all term insurance is created equally. A lot of times, people out there will tell you to just go get the cheapest term that you can afford. That may not always be in your best interest, and ultimately sometimes it may be exactly what you're looking for. How do you know? How do you know how to identify the right companies? How do you know what term insurance is going to be the best fit for you and your situation and to help you meet your goals and objectives? Because like any other financial product, that's all we need to be thinking about is what are our goals and objectives and how do we kind of reverse engineer our way into selecting the right products that fit those needs. And so that's going to be that. If you haven't already, make sure you subscribe and hit the bell. That way you're notified every time I launch a new video. Let's get into this. Hey, what's up, Cashflow hackers? It's Chris with Life 180, and today we are doing something different. A lot of times I'm talking about permanent cash value life insurance, real estate, all these things. I don't spend a whole lot of time talking about term insurance. And you know what? I'm going to say my bad for that because term insurance is something that's extremely important. I don't know why I don't talk about it a lot. I think it's probably because it's just not a sexy topic. It doesn't get a lot of traction. But you know, in the spirit of what I want this channel to be about, it's about education. It's about really helping people understand the ins and outs of all different elements of life insurance and how it can help solve different problems to different people in different places at different times of life and all these things. And so in this video, what we're going to do is we're going to talk about the different types of term insurance, because not all term insurance is created equally. We're going to talk about the concept of human life value and how we want to utilize term insurance to maximize our human life value. Now, I am, full transparency, a huge believer, if this is your first time here, in utilizing permanent cash value life insurance, whole life insurance, but I'm also a believer that not everybody should try to put all their money into a whole life policy, or an index universal life, where I think you should do nothing with. A lot of people would believe that you should take everything you can and maximize those two areas. Now, here's the deal. I'm young. I guess at one point in time I would have considered this old. I'm 43. I've got a wife. I've got 3 young kids, 12, 9, and 5. And so at the end of the day, I have a lot of insurance need, and I can't cover my entire human life value and without using term insurance. And so what I'm going to do is, let's first and foremost, I've been using this term, and it's a very technical term, and it's called human life value. And so let's talk about what human life value is. And I think once you understand this, then we'll get into the different types of term and how to help meet your human life value, because human life value is going to help you determine how much life insurance. I'm just going to write how much. Determine how much life insurance the insurance company is going to give you, right? That's what the human life value is. So what the insurance company is going to do is they're going to look at your age. They're going to look at your income. They're going to look at your debts. They're going to look at your family situation, i.e. how many kids do you have? Are you married? So what's your real insurable need? And then they're going to determine your human life value from that number. This is something that's really important to understand. You can never buy too much insurance because the life insurance company is going to limit how much you qualify for. So when you get all these people out there that try to tell you you should only have 10 times your income because they feel like they're smarter or whatever, I'm a big believer if the insurance company is going to limit what they're willing to give you, because they have equations that are going to limit their risk. Because let's face it, if they gave you, if you were making $50,000 a year of income, and then you said, hey, I want $10 million of life insurance, and a life insurance company would say, hey, what kind do you want? Well, I want 10-year term. They go, well, Chris, that's going to be a lot of money. You make $50,000 a year, but a 10-year term, maybe if you're 30 years old, 10-year term for $10 million might be like $400 a month. Well, the risk reward for me is as the insured is way out of whack for the insurance company, because my human life value, I'm not worth nearly 10 million if I'm only making $50,000. I'm only going to be given a metric that the insurance company is going to say, all right, we're going to give you anywhere between 20 and 40x income based on a sliding scale algorithm. That's what we're going to be willing to do to you based on your age and all the variables that I said. And this is going to be what determines your human life value. And so what I'm always looking at first and foremost when looking at any insurance, whether it's whole life or term, is how do I maximize this human life value? And I want to use term insurance to do that. Now, when I'm using term, this is what the purpose of this video is, but I need to explain this to you, is do I want cheap term? Or do I want convertible term? Now, if you don't know much about term insurance, this is not going to mean much to you. But like, let's say I wanted, let's just say I wanted $2 million of coverage. Okay, $2 million of coverage is what I'm going for here. Okay, if I want $2 million of coverage, and let's just say I'm a 35-year-old going right there, you know, you might be talking for cheapest cheap term, 55 to 60 bucks per month, maybe a little bit more than that. Whereas a convertible term would be probably 75 to maybe 100 a month, depending on the company. So you have to determine when looking at this. A lot of people would say, "Wow, let's just go with the 100 versus the 60." So this is $720 per year. This is $1,200 per year. So a lot of people would look at this and say, well, for $2 million, apples to apples, I'm going to take the $720 per year versus the $1,200 per year. Well, we have to think about what is the purpose, what are the problems that we're trying to solve here. First of all, is the term convertible. Okay, if it's convertible, well, that's going to have a value with it. What does convertible mean? Well, there's going to be a cost because there's more risk. Everything in insurance company does is actuarially driven. So convertible means if you become sick for a conversion period, let's call it 20-year policy for both of these. Actually, these would probably be more 10-year prices, but let's just say we have a 10-year premium or a 20-year time frame. What's going to happen here is during this time frame, for a period of time, typically probably 17 to 18 years, there'll be a conversion period, or before you're the age of a certain age, like 65, you can convert the policy before a specific age or during a time frame during this conversion period, right? And so during that period, they will allow you to convert this $2 million to permanent insurance no matter what. Think about it this way. Imagine you got to year 18 out of 20 years and you had 2 years left on your policy, $2 million, and you had all this stuff going on and you got cancer. And you knew that it wasn't good, and there's a good chance you could make it 2 years, but the chances of living longer than that were not very good. Do you think you would want to convert this $2 million and make it permanent? Well, the answer to most people, I think, would be yes. And because you paid this extra money, you'd have the ability to do that. Now, there's another element to this that goes into, so hopefully, well, before I move on, hopefully that explains the conversion, right? You get to convert it to permanent insurance. And so you always want to, I'll finish this, with convertible term, you need to be able to convert it for a period of time. And so you need to be clear on times and dates, and put it in your calendar to make sure, even way ahead of time, to make sure that you don't miss your conversion window. I can't tell you how many times I've seen it be missed by months, and there's nothing you can do about it. So that's one part. And then make sure converts to a good product. And so what I mean by this is go with a participating mutual whole life company. Okay, that's what you want to do with a convertible term policy. You need to have that in place. Now, a lot of times, not only will you have a convertible term with a participating mutually held company, but you'll also find so that is one thing. So you'll have the convertible term that will go that can be there, and that's one thing you need to look for. But then there's another type of term insurance, and I'll come down here, where you have cheap term options that you have to think about versus living benefit term. It's hard to find convertible term that converts to a really good conversion policy and gives living benefits because I think it would just get more expensive that way. But let's use the same $2 million example. Let's use the same $60, and maybe this one, instead of 60, it's probably, we'll just say $100 again. So what does living benefits mean? That means if you become ill, you have access to $2 million for medical treatments. I call this medical directive coverage. When I was 30 years old, I bought a policy of $1 million just for this. It cost me 28 bucks a year. It was $1 million at 28 years old, and it was a 15-year policy. It actually just expired. It wasn't convertible to a thing, but it's something that I use. It only cost me 28 bucks per year, but and I bought it because I have a history of testicular cancer, Crohn's disease, colon cancer, all these things in my family, right? And so my brother had colon cancer at 24 and has Crohn's disease and had to have a portion of his colon removed when he was 24 years old. My cousin had testicular cancer in his 20s. My grandfather had testicular cancer in his 30s. So this is something that I was really kind of concerned about, right? Like, and I wanted to get a treatment. Now, medical coverage for the kind of medical treatment that I was looking for was catastrophically expensive, right? High deductible stuff. And so I went in and I said, you know what? I want to buy a living benefit term because it's like 28 bucks a month for $1 million at 28 years old. You know, so we'll say 28 bucks per month. Oh yeah, $1 million of coverage. 28 bucks per month, right? And what it gave me is if I became diagnosed with cancer, with a terminal illness, which every cancer is, that's the definition if you don't treat it, then you are, then I was, out of that $1 million, I was going to be able to use $600,000 for whatever medical treatment that I wanted. I use this story a lot. My father-in-law was diagnosed with stage 4 pancreatic cancer on November 4th of 2020, and he was able to, well, because he was diagnosed with that, most people, given that death sentence, would just be stuck, forced using the medical treatments that the insurance company gives him. Now, he went and talked to the oncologist. They gave him 3 months to live. They said with chemo radiation treatments that they could probably make him last to a year, but his quality of life would be garbage, right? He was able to use alternative treatments because he had access to capital, and he was able to have access to capital that would afford him alternative treatments that most people couldn't afford. He spent multiple 6 figures treating his pancreatic cancer, and I could tell you today, almost 2 years later, he's still playing golf 4 days a week and hanging out with his grandkids, right? Living 4 miles down the street from me. These are the things that sometimes when you focus on the living benefits, that's really important. Now, when I talk about whole life insurance, one of the biggest reasons that I love utilizing whole life insurance as an emergency account because it's a real, true emergency fund. And I'm going to actually do another video on that because I think it's really, really powerful and important if you haven't built an emergency fund for, like, say, financial emergency, like what Dave Ramsey would tell you to keep in a savings account. I'm going to do another video showing you on why you should utilize whole life insurance as an emergency fund just to take care of those problems. So if you haven't already, make sure you subscribe. That way you are notified when that video comes out. But this is really important. I just wanted to get this across because these concepts are so important to understand. People don't realize that not all term is created equally. A lot of times people think about just getting cheap term. Well, yeah. Well, first of all, if you're going to get cheap term, how much do you need? Let's work it backwards. Let's focus on the human life value over here, right? Let's focus on this human life value. Figure out, let's not get how much Dave Ramsey tells you to with 10 times. Let's figure out and maximize the human life value that the insurance company is going to give you because they're not going to let you get rich off of their back. They're going to give the amount of insurance that you genuinely qualify for. And there's a reason they do that. When you work your way back into it and say, all right, what would happen if I left? I have $50,000 of income that my wife and 3 kids are depending on in this position, right? So if I say 50,000, right, and I bank it out, there's a thing called the 4% rule. 4% rule, right? So the 4% rule basically says, well, I can take 4% of a distribution off any amount. So that's $1 million gets me 40K per year, right? So I need at least $1 million. A lot of people, 10 times income is only, 500 grand. That's 20 times income just to get the 40 grand. You need, 25 times income just to hit the $50,000 a year to replace your income so your wife can take care of your kids when you're gone, or your husband can take care of your kids when you're gone, right? Like that, these are the things that we need to be thinking about. It's like, why are you buying the insurance? What is the purpose? What is the intended use? What is the problem you're trying to solve? You're not buying the insurance for you. You don't need it. Your family needs it when you're gone. You got to cover your human life value. Once you figure that out, then you got to figure out, well, what's the next step? You got your basic need of human life value covered. What does the conversion look like? So you can convert it once your cash flow is good into a permanent policy, or if you run into a calamity with your health with a permanent policy, you have that covered. And then the other thing to think about on ways that use term is, do you want to use it as a living benefits coverage? Most people don't realize that's even an option. And here I'm going to show you that you can do that. I've already showed you, I should say, that you can do that. And that I think everybody should have at least a little bit of money. Think about it from a financial perspective. Heck, you could go get a couple $100,000 living benefit term policy even in your 40s, and it's not going to cost that much money, and it's just going to give you a little bit of, it's like it's the opposite. It goes with your high deductible medical plan, but it's like a catastrophic medical plan. It's not exactly the same, and you got to be really careful about how you perceive that, and I'm not trying to position it as a complete replacement, but it's a great tool that you can leverage for different kind of scenarios that may come up in your life, and give you more control over different things that might happen to you. And so to me, that's what insurance is all about. We want to get our dollars performing multiple functions, and it's not just like, hey, I buy this money and I die with cheap term. It's I can buy this policy and it's going to solve multiple needs, because make no mistake about it, you are going to have those multiple needs. So anyway, hopefully you found value in this. If you have any questions about term insurance, if you're interested in getting a term insurance quote on what one of these would look like for you, go ahead down in the description below. Just reach out. There's a link, set up a clarity call. One of my coaches can walk you through the entire process. No harm, no foul, no pressure. If they do pressure you, email me, Chris@Life180, and I'll slap them for you, because I'm all about no pressure. I don't want any pressure on anybody. We are here just to educate and serve, and I truly believe when you understand this stuff, you're going to want to do it, and hopefully you're going to want to do business with us. And if you do, awesome. If not, totally cool. It's more important that you know it and you do something with somebody than that you do it with us. So anyway, that's it. Have a blessed, inspirational day. We'll talk soon. See ya.